Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. It's been kind of an interesting 2 weeks since we last spoke. Gold's pulled back, and the stock market actually, the S&P went through its 50-day moving average. That's a level that it had been floating between that and the 200-day moving average, but not much has really happened with the market. Even with that move, people were looking, I think, for a giant, huge rally, but not much. It just kind of went up a day or two. That's about it.
John Bolton, the national security advisor, either resigned or got fired or both. And that's actually had an effect in one area of the markets, hasn't it?
Yeah, it's pretty funny that news just came out right as we started talking, and oil was up today a little bit, but as soon as that news came out, it fell. It's in the red as we're speaking, so maybe that means there's a less chance of something happening in the Middle East that would make oil prices shoot up. So for in that sense, it seems to have an effect on that market.
Of course, we're coming to the end of driving season, so doesn't that naturally make the price of oil come down anyway?
Yeah, typically oil does tend to make a peak in July and fall into the December, January time period, and it does look like that's playing out. Oil was $60 or over 60 at its last peak in July. Now we're in the mid-50s. So, but that's not that big of a deal. If we went down to $50, it's not a huge drop. That's kind of typical for what happens this time of year.
The price of gold has settled at $1,500 US per ounce. Is that going to stay there, or is it on its way down?
Well, that's the big question I think people have in the gold market. And, of course, I think every move that takes place has to be put in context with larger trends, which actually we just did when we were talking about the price of oil together. And with gold, people need to first understand that when it went through 1350 early in July, that was a long-term resistance level going back over 4 years, and basically coming out what I would call a stage one base into a bull market in which the 150 and the 200-day moving averages will act as support. Now, we've gone way above those levels, and now the 50-day moving average should be expected to be important support. Now, when gold went to 1450, there are a lot of people that thought, oh, that's got to be the top, and we're going to come back down to 1350, and it never did that. Then when it got to 1500 in August, I saw such people saying the same thing. It's going to drop, and it really didn't do it. So now finally, it's gone to 1550, and some of these same people have said the same thing, and finally it has dropped a little bit below that 1500 briefly a couple days ago, and now it's kind of floating around that level. And some of these people are again saying, well, now it can go to 1400 or below that, and now we can have the big correction that we've been looking for. However, 2 points I'd like to make is, one, nobody can completely predict future price movements. So even if someone was wrong before, they can be right now, or vice versa. I don't really make too much out of that. And secondly, there is a pattern to gold corrections or pullbacks in which the pullback happens at first, and the gold stocks get hit pretty hard as it begins. But then when you get to the end of a pullback, the mining stocks, and I really mean the big cap mining stocks, when I speak of this, and the ETFs like GDX, they'll actually start to outperform gold, even go up on days when gold is down, or barely drop when gold is dropping. So at the start of a correction, the GDX and the big cap gold stocks, they'll fall more than the metal. And then when you get near the end, that'll stop happening, or they'll even go up as gold continues to pull back a little bit. And it appears that's at the moment we're at now. And what that tells me is I don't really have the ability to predict whether today was the exact bottom, or the exact bottom's coming tomorrow, or it's going to be right on the 50-day moving average, which currently is at 1470. But I can say that judging by the action in the big cap mining stocks and how they're performing now in regards to the metal, that we're probably near the end of a correction. So I think the downside is, potential is probably that 1470, 1480 level, but is not at 1400 or 1450 or something like that. So I don't think this is a substantial pullback that we're seeing, but just a quick shakeout drop, part of a bigger uptrend that's likely to continue through the rest of the year. It may take 2 or 3 weeks of sideways action before 1550 is broken out again, or 1550 is broken, or it might happen at the end of October, November, early November. In fact, when gold first went through 1350, it went to 1450 and sat there for about 6 weeks. So, yeah, I think that's really what we're going to experience here, is more of a sideways consolidation than some giant smash pullback, which is what some people are talking about, and I think many people are afraid of, because everyone participating in the gold market and in these mining stocks, in the back of their mind, they have a memory of what happened in 2016. There's a big rally that year, and then in the fall, a big pullback and drop, and it took up until this year before the highs of that level were broken. But one thing that people should pay attention to that I think is very noteworthy and is different from what took place then, besides the big cap mining stocks performed a lot worse, is that the small caps are barely dropping at all. The junior and exploration mining stocks, the stocks that have market caps of less than 100 million, many cases less than 20 million, they've barely pulled back at all in the last couple of days. In fact, some of the ones I follow have actually gone up. And that's really interesting to see that happening with the silver small cap stocks, because the price of silver, is fallen in a large percentage basis, in a certain sense, going from above 19 to close to 18. And as these silver stocks barely even moved. So when you get a real correction that's going to go on for weeks or months, those small cap mining stocks typically really get smashed. And they're not doing that at all. And that tells me that this is not a giant correction, but a nice pullback. And I think people really should take advantage of it, and buy stocks that, or increase their position. They don't feel like they've got a big enough position, or look for small cap stocks to get into, because I think they're going to lead the way going forward from here.
We'll have more with Mike Swanson right after the break.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN.
and the OTCQB symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, with gold, people are asking, is it a safe haven, or if the market has a major correction, will the price of gold also go down?
Well, I would say, again, people have the memory of 2008, I think, when they asked that question, because gold, of course, did well in 2007. Starting in August, it broke away from the stock market and continued to go up as the stock market fell. But then in the fall of 2008, gold fell with the stock market when that stock market crash happened associated with the banks. And gold stocks, of course, got decimated. But in the bear market before that, gold went up during times of stock market weakness. So, which is going to be the case here. Well, I think what happened in 2008, part of the reason, there's two reasons it happened. First of all, that there's a trend of hedge funds flocking into gold that had been going on for several years and really accelerated for the 12 months going into the crash. And I can't say, that's something that's really going on now. Maybe it's been going on for 2 or 3 months, but I can't say, it's been going on for years. And also, the second thing that happened was that the bond market really went down along with the stock market, causing junk bonds to collapse, corporate bonds to collapse. There were all these financing worries, and that was affecting gold stocks, because these gold stocks, such as Barrick and Newmont and so forth, they take on debt. They use the bond market to do that, and that was causing those stocks to go down. And the way we're situated in the markets now, I do think there is a possibility of a bond bear market or a big drop in the value of corporate bonds, but I don't think that's something that's going to happen this year, probably not next year. It's a problem for the future. So I don't think these are issues anyone should worry about at this moment in time. And then this could be a deal like that 2000 to 2002 bear market, where in the stock market, where gold just benefits from it. And I think that so far that seems to be, the case. When the stock market fell from October to December last year, 20%, gold went up. And gold stocks went up. In fact, they were the top and best performing sector to be in, period. And even now, with the stock market having rebounded since that December drop, even making a new high in July, gold stocks are up substantially from where the stock market was in October last year. And even in the last 12 months, the stock market's basically gone nowhere, where gold is at over 1550. So I think that's just simply going to continue to be the case, where the stock market is going to outperform gold. Gold is going to outperform the stock market. And I think more and more people are going to notice that happening and get into it. It's only something that's starting to happen. And we've seen some people, such as Ray Dalio, come out and really recommend gold, not just because of what's happened the past couple months, but he has an expectation that it's going to be, that this is just going to continue throughout the next decade, where gold outperforms the stock market, acts as a safe haven. Bonds are doing that too, but if bonds weaken at some point, then it could be, instead of the 2008 scenario, that even if it hurts the mining stocks for a period of time, that it still could benefit gold.
We'll have more with Mike Swanson right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, I know you like to look at international markets where there might be opportunities. Is there anywhere in the hinterlands that might have some opportunity for people?
Well, the big challenge in that now is that so many of the global markets have traded together over the past couple of years, and that started to change a little bit last year when the emerging markets really crumbled before the stock market did, actually. And now, as we're speaking, interest rates around the developed world are declining substantially. In fact, the United States still has among the highest interest rates, of the rest of the world, higher than Europe. And the signs of an economic slowdown seem to be, focused first on Europe and Asia, and then likely to spread here. So at this moment, I think as a whole, the rest of the world isn't necessarily a better investment. That said, there are, I think, pockets that look interesting to me for sure that aren't really a part of this bigger trend, and the way they're not a part of it is they broke away from it by crashing already. And particularly this happened in Turkey a year ago. Actually, in August last year, Turkey crashed. And they're still going through something of a economic crisis. The Turkish lira is still in decline, and their debts and deficits are just causing turmoil. They're experiencing extreme inflation. Something similar is happening in Argentina. Russia actually went through this a couple years ago, 2016. And what happens is when a country has a crisis and their stock markets decline, the typical bear market takes 2 to 3 years to play out. And that makes me think that Turkey is likely to be an attractive investment at some point next year. So that's what I'm looking at as the next kind of investment opportunity outside the United States, is Turkey at some point likely in 2020. And the good thing about that is Turkey is actually one of the top 20 economies in the world, going by the size of it. And there are lots and lots of stocks that trade in the United States and in Canada as ADRs that are Turkish stocks that pay big dividends at 5% or higher. And if the Turkish lira bottoms out, then you also will get the benefit of the currency coming back somewhat. So I think that's the main place I'm focused on right now, but I'm being very patient about it. And frankly, this is a market where the most exciting thing at the moment is gold and silver and the mining stocks. And the U.S. stock market has basically done nothing in 12 months. And it seems to be floating around, and I don't know if much is going to happen. Certainly not between now and the next time we talk. At some point, we're going to probably see it break the 200-day moving average and go through a real correction, but probably not in the next 2 weeks. And not much to really do, I think, but be patient, besides participating in gold and silver.
Mike, I know you like to look at gold's action on your Robinhood index. Is gold still at the bottom?
I can pull it up and tell you exactly, but I'm almost certain it is. The funny thing about Robinhood is that the stocks that are the most popular on there, what they do is they'll show you how many people own an individual stock, and they give you a list of the top 100. And the number one on top of the list is Aurora Cannabis, with 527,000 people owning it. The second one is General Electric with 290,000. Apple is in the top 10 of 200,000, and so forth. And the list, Apple used to be number one, and it got displaced. Facebook used to be in the top, and these FANG stocks, but they all kind of have fallen back. And what happened was last year, when the stock market fell 20%, Apple and Facebook and Netflix and Nvidia, they got hit even worse than the stock market. And I think a lot of individual investors, judging by Robinhood, got out of those stocks and decided to get into the marijuana stocks, and stocks like General Electric that actually had big rebounds in January and February. They're basically chasing the stock action those 2 months, and I think that's what has made these stocks get in this top 100 list. And there isn't a single gold stock in the top 100. And when it comes to the mining stocks, GDX is only owned by a total of 5,900 people on there, which is hardly anything when you can think over 500,000 own ACB, one marijuana stock, you know. So back a couple months ago, there are about 5,200 people in GDX, so that is somewhat of an increase. But I think in no way can we say that there's some sort of mania going on in mining stocks. 11,000 people own Barrick. GLD, 10,000 people own that. But it's still a drop in the bucket compared to the number of people that are involved in the marijuana sector that are small investors using Robinhood accounts. I think this is pretty much indicative of what's going on in the United States. Ameritrade doesn't give you the exact specific numbers like this, but they'll put out a summary report of all text once a month, and they also show that General Electric is a top stock, Canopy Growth, and no gold stocks have been mentioned. But in 2016, some gold stocks would be on the top 100 list, but not today.
Mike, thank you so much for chatting with us.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.